Hi, how are you today? How did you find this lesson? Were you able to do your own research? I purposely did not prepare any TRT-POV on the Ichimoku technique because we feel that it does not fall within our area of expertise. Anyway, the technique was adequately discussed in the MCTA video, so it gives us all an idea of what it does. We are now on Module 11, Money Management and Computers. So let's go straight to the lesson. Welcome to the Responsible Traders POV. These are my notes, my own additional research and studies on the topic that I posted, and my personal observations and opinions that I am sharing with you to further enhance our knowledge and understanding. Some of these were previously posted on the Responsible Trader thread of Stock Market Pilipinas. This is the latest version of previous posts I made. Some of these, plus further explanations and discussions, will be appearing in my forthcoming book, The Responsible Trader. I believe that this lesson, money management, should be the first one to be learned and mastered if you want to be successful in trading. A lot of newbies fail in their trading endeavors because of improper money management, dissipating and burning their trading capital in the process. If you consider trading as a business, as I previously stated, your money is your tool for conducting your business. If you lose this tool, everything that you have learned about trading will become useless. Please do not get caught into a systems versus instinct dilemma. It is a mental trap. You need everything to be a successful trader. This picture summarizes everything. The ones in red: proper order execution, proper risk management, technical knowledge and market knowledge you can learn from books and seminars. The one in blue: confidence, frame of mind, and discipline you have to bring out from yourself. And the one in yellow: experience and instinct, is the result of all the elements. However, it does not stop there, and the process goes on and on until you have attained the level of the learning ladder of trading you have set for yourself. Always strive for independent thinking, not blind following. The sooner you do it, the better for your trading account. In our opinion, the best definition of money management is the one given by Dr. Van K. Tarp. Money management is that portion of your trading system that tells you how many or how much, how many units of your investment should you put on at a given time, how much risk should you be willing to take. Aside from your personal psychological issues, this is the most critical concept you need to tackle as a trader or investor. Money management refers to how you allocate your money to different trades. How much will you put into each of the stocks that you have selected? Many trading courses concentrate on how to determine the best entry and exit points and give less importance to how much to put into the trade. From the definition of money management given by Dr. Ban K. Tarp, the key elements of money management are: number 1, position sizing; number 2, risk-reward ratio; number 3, diversification. Let us discuss them one by one. But first, let us take a look at how we should be trading by looking at the responsible trader's seal. The responsible trader's seal is our guide. It is important that we know where the trend line is to determine the trend, what the support and resistance are to establish our entry and exit points. We buy at support and set the target price at or near resistance and establish our stop loss below support. And the responsible trader seal, this line here is the resistance. Below the resistance is our target price. This line represents support, and below the line is our stop loss, which we set below support. Position sizing is a common term used to describe the process of deciding the size of your trade. In other words, sizing your position. Whatever you do with your position sizing, the important thing to remember is not to place all of your money into one trade. One of the elements of responsible trading is protection of capital. Do everything you can to take care of your trading capital. The easiest way to position size is to break your trading capital into equal portions. For example, if you have a trading capital of 100,000, you can divide this into equal portions of 20,000 pesos each. By spreading your money across different positions, you are eliminating the possibility that a large and sudden fall in the price of an individual stock can affect your whole capital and trading activities. My risk-reward ratio is situational, and it depends on the type of trade that I enter. In making an investment or a trade, the general rule I follow is the higher the risk, the higher the return. Also, the longer the holding period, the higher the risk. I classify my trades therefore into three. Swing trading with a time frame of short term. My holding period is days to weeks. My risk-reward ratio is 1:3 to 1:4. For position trading, my time frame is short term. My holding period is weeks to months. My risk-reward ratio is 1:5 to 1:6. For investment, the time frame is long term. My holding period runs from months to years. My risk-reward ratio is 1:7 or more. Let me give you an example of a study I made on DNL. This is the major trend line. And then we have here an intermediate trend line. So I decided to do a swing trade. The entry price at only support is 15 pesos. My risk tolerance is 2% and my risk reward ratio is 1:4. I always start every trade with my risk tolerance. Based on this, I can automatically determine my target price and stop loss. Of course, the figures I get are just guides. I make adjustments based on my actual analysis of the chart. So here on DNL, my risk is 2% of 15 pesos. My entry price, this gives me 30 centavos. My reward is 4 times my risk, and this gives me 1 peso and 20 centavos. To arrive at my target price, I add my reward of 1 peso and 20 centavos to my entry price of 15 pesos. So this gives me 16 pesos and 20 centavos. My stop loss is my 15 pesos entry price minus my 30 centavos risk. This gives me 14.70. You will see here that my support and my stop loss are the same based on the actual computation, and the target price is given at 16.20. However, since resistance is at 17.14, I set my target not at 16.20 but at 17 pesos. Using our position size of 20,000 pesos, this will give us 1,300 shares based on a 100 shares per board lot requirement. Diversification is a familiar term to most investors and traders. In the most general sense, it can be summed up with this phrase: don't put all of your eggs in one basket. The idea is to create a portfolio that includes multiple investments in order to reduce risk. Consider, for example, an investment that consists of only one stock issued by a single company. If that company's stock suffers a serious downturn, your portfolio will sustain the full brunt of the decline. By splitting your investment between the stocks from two different companies or several, you can reduce the potential risk to your portfolio. With stocks, investors can choose a specific stock. In summary, the main objective in trading is to protect and preserve our capital. Position sizing and risk management are essential in achieving this objective. Don't trade more than 20% of your account in one position. Don't risk the loss of more than 2% of your account on any one trade. You may change this as you gain more trading experience. In a losing position, avoid risk and cut your losses quickly based on the stop loss that you have set. In a winning position, add to your position and let your winners run. Last, learn to control your emotions and trade consistently in accordance with your trading plan. Okay, this will be all for now. Until then, take care, and I wish you the best in your learning journey, and good luck on all your trades.